So just a show of hands, who thinks lack of access to adequate financing is preventing more missing middle housing from getting built? Absolutely. So financing is a major barrier to getting more missing middle housing built. And the main problem is institutions do not offer adequate construction financing for small infill projects. So often the programs they offer for the construction of 20-story multifamily buildings are the same programs they offer for financing mixed multiplexes, like a 4+1. So I guess also institutions have less flexibility when it comes to construction financing. If a problem arises midway through construction, their hands are tied. They're not able to think entrepreneurially. Entrepreneurially, they're not able to think outside the box. There's also often a disconnect between the property owner, the cost consultant, and the lender. There's kind of a middle person in there that also causes issues. And when institutions through CMHC insured loans, they do finance the construction of multiplexes, it often isn't particularly cost effective when you factor in the delay of the project. If the project is delayed by a few months based on the fees, it's not particularly advantageous from a cost perspective either. So what's the benefit? So that's where Foremost Financial comes into play. We specialize in financing small infill construction projects. The company has been around for over 39 years, and we source our capital from private individuals. We have 2 mutual fund trusts, so we're able to kind of set our own terms and lend with an entrepreneurial lens as a result of sourcing our capital from our own investors. And we have about 18 employees, and we still have defined processes, so it's not the Wild West. Our clients know what to expect and when to expect it, but we're still able to kind of not lose our entrepreneurial lending approach and still be quite flexible. So about me, my name is Matt Gonsalvez. I'm a loan originator with Foremost Financial. I've been in the business for over 13 years. Since 2017, I've closed over 416 transactions. And so my job is to find people to lend money to, structure the transaction, and I like to impart the wisdom, the experience I gained from closing 416 loans, and let you know the problems to avoid before they can become problems later on. So I like to take a proactive approach to advising my clients. We've been paid out back on quite a number of CMHC insured loans over the last few months. We have about $10 million in cash on our books that we have to deploy. So if anybody in the audience could help me out deploy this cash, it would be greatly appreciated. So what sets Foremost apart from other private lenders is we really strive to give you the money you need when you need it, the money you expect when you expect it. We do our cost consulting in-house, so we do so there's no kind of middleman between us and the builder, the developer, the owner. We do a full accounting of it, so we have faster draws. If our inspector is on site today, you can expect money in your bank account within 1 or 2 business days, quite fast. And based on our experience, based on our staff, we have probably one of the most experienced teams in the industry. So this is an example of a cash flow pro forma that we have started to provide our clients. So those working with us can know exactly what to expect and when to expect it. I think regardless of who you work with, it's really important to understand, based on what work is done to your project, what your requirements are. So what insurance requirements are, what documentation, permits, reviews, and how simple that process is. So that's my advice to everybody. And then this is an example of some of the multiplexes that we've been financing. A lot of purpose-built rental across the city of Toronto with a CMHC exit. We've been doing this for about 4 years now since the multiplex bylaw has been passed, and many have been refinanced right now, so it's kind of working really well, doing a high volume of these right now. This is an example of a really interesting project that I'd love to see more of. So we kind of started seeing multiplexes at Trinity Bellwoods probably 12 years ago before the multiplex bylaws were passed, and they were kind of doing ADUs and legalizing units as they went. But now the multiplexes are kind of creeping from the downtown core more into the suburbs. So this is an example of a project in North York. It has 2 garage spaces. There's parking for 5 cars. The front 2 units are about 2,000 square feet. And it's really kind of, if you want to raise a family, have lots of space, this is a great option for you. So I'm hoping to see more of these. And these are examples of some multiplex condominium units. We've been financing these for the past 12 years now and done a large volume of them. before the math was really stacked in favor of the purpose-built rental because you have that 100% HST tax credit for the purpose-built rental, so you didn't have to self-assess HST once your multiplex was complete if you're doing rental. But if you were to sell a multiplex condo, you'd have to pay HST. So about 95% of the multiplexes that we've been financing were purpose-built rental, but thanks to this tax credit, we're seeing more and more multiplex condominium units across the city. And these are typically the most desirable areas of the city, places where really people would want to live. And the alternative is to live in a dated 100-year-old home that's kind of reached the end of its useful life. So some of these are incredible. So to see the interior, people are doing really special things in this space right now. And the multiplexes aren't just a Toronto phenomenon. We're seeing multiplex construction across the province. One of these projects is from Oshawa, one in Bowmanville, one in Kitchener. We're seeing some pop up in Mississauga now based on the development charge exemptions, some in Brantford. So looking forward to kind of seeing more of these outside of the city of Toronto. And this is kind of a map of some of the projects, some of the missing middle projects that we've been financing. These include townhomes, so it's kind of not just a Toronto phenomenon. It's kind of branching out more and more, which we'd love to see more of these built across the province. And then one of my favorite stats is the land price per leasable square foot. So you take the purchase price of the land and you divide it by the leasable square foot in the building permit. So the highest we've seen is, I guess, $311 per square foot. This is off Ossington, Queen and Ossington. So one of the most desirable areas of the city, very walkable, in a row house. So it kind of makes sense to kind of pay a premium. I'm a fan of, I believe that building on a premium lot versus building on a lot with not as desirable, it costs about the same. So my advice to my clients is often spend a little bit more money, get a very desirable lot. Don't break the bank for what you're trying to build, but try to buy a nicer lot, but keep in mind price per leasable square foot, because we've seen financing applications for people building on the same street and the price they paid has been vastly different based on the price per leasable square foot. Based on the lowest one, $116 a square foot, these don't really include, so some of these have gone through the committee of adjustments to get more leasable square foot, and they don't include the carrying costs and planning costs involved with getting approval for more volume, more leasable square foot on the site. So I would take this with a bit of a grain of salt. We've seen some interesting cases on the major streets where people buy lots, 7 to 2, build 2 multiplexes. Those look quite good. We haven't seen building permits for them yet, but I've seen some as low as $100 per square foot if they're able to get approval for what they want. So I think it's one thing to keep in mind, kind of a fast rule of thumb when evaluating projects, to kind of do so quite quickly, so you're not kind of spending too much time looking at the wrong lots, looking at the wrong projects. And then this is hard cost per leasable square foot. It's kind of funny how much these stats vary. And I don't think price per leasable square foot or hard cost budget per leasable square foot is the best metric, because some of these multiplexes are vastly different. A sixplex with 600 square foot units should be a much higher hard cost budget per leasable square foot, because there's so many bathrooms, so many kitchens, so much fireproofing, so much HVAC systems per square foot. But we've been seeing in the suburbs these 2,000 square foot multiplexes with that more space. The space per, like the kitchens, the bathrooms per leasable square foot, the fireproofing isn't as great. So the larger of a multiplex you get, the more the hard cost budgets per leasable square foot fall. So yeah, on average, just under $300 per square foot. That excludes construction management. Hoping to see these fall over time. But yeah, it's a bit of range, but we kind of see a wide scale. In the suburbs, we believe, probably in the city of Toronto, we think the lowest you can probably build for is $225 a square foot. We've seen projects in Kitchener probably around 200 square foot, some in the Durham region around 200 per square foot, with more space, with access to trades that are more reasonably priced. We believe that's possible, but I think building for around $200 a square foot, we've heard some people try to submit budget to us, but we kind of just don't believe it's possible in the city of Toronto, especially in the outer suburbs. But definitely downtown's more expensive to build than the suburbs, but something we're keeping an eye on and something we'll keep up to date with. And then, okay, who here would take 4 hours of their time to save $10,000? Show of hands. Absolutely, everyone would. It's funny. So when you're asking somebody to borrow $2 million or $3 million, it's funny how often people just don't spend the time to properly communicate their case for why someone should trust you with their money. So my advice for anybody seeking financing, just to make sure that if it's you or if it's a mortgage broker you hire, whoever is your representative seeking financing, $1 million, $2 million, $4 million, that they really spend time communicating the merits of your project. Spend time, go into detail about why your project is worth investing in. The lot size, purchase price, hard cost budgets, great architectural features, why it really makes sense. And then talk about your team. Some people have amazing teams, great interior designers, great construction managers, engineers, architects. It's all part of the story. You're telling a story about why what you're doing is special and unique. Spend the time on that. And then financial strength. If there's a cost overrun or a project delay, explain how you have the money to overcome that so the lender doesn't have to worry that if there is a $100,000 problem, they come to you for more money rather than kind of solving their own problem. Lenders, if you roll the dice 100 times a year, you wouldn't want to have kind of issues come up. So that's why lenders are quite risk averse because they roll the dice, because they do so many, they wouldn't want to have issues on their books and a bit of a headache. So happy to continue the conversation. I started a YouTube channel, Matt Gonsalvez TO. I have my first interview up. I will be posting some more interviews. I have one with Ben Singer that'll be up in a few days. So subscribe on YouTube, follow me on LinkedIn, send me an email. I'm starting an email list too to kind of provide more content, more up-to-date statistics for my subscribers. So happy to continue the conversation and best of luck out there building out the missing middle.